You guys here. Thank you for coming down. I hope we can have a great session here today. I'll try to cover an interesting aspect about the wealth side of Bitcoin. A lot gets spoken about the hodling culture of Bitcoin. So, when we say hodl, what does really hodl in essence mean from building in the Bitcoin space? So, wealth banking is an interesting topic. I come from a wealth banking background. I'll also shortly share my background. So, we're talking about future of wealth banking, and I know it's interesting to use the word bank in a Bitcoin conference. I'll try and kind of also debunk some of the myths around how banks get villainized in the name of Bitcoin as well. So, we'll talk some of those aspects. So the audience for this would be, for this session today is, if you're an entrepreneur out there, if you're looking to build a business in Bitcoin space, this will be really interesting to see some trends that we are witnessing as a private bank. If you are an existing startup and you have struggles of finding product market fit, you might find some answers here today if you're having a challenge finding product market fit. So when you build a business, it's always built in a market. You can only control yourself, your ability to build. You can't really control what the market does to you, right? So it's very important to study the market. It's very important to understand human behaviors before you also embark on a journey to build a business. So, okay. The clicker doesn't work again. Okay, just give me a minute. Okay, we are back. Okay. So a quick background, I'm a serial entrepreneur. I've built 3 companies over the last 15 years. And I also developed some stuff in the Bitcoin space. I globally speak on this topic. I come from a background of class of 2013, so I've been almost like 11 years in the Bitcoin space, long enough to see a lot going on. I angel invest significantly in Bitcoin startups as well. So I have around about 28 companies invested in the Bitcoin space only. And I specialize in alternate investments, whether it is digital assets, prop tech, and angel investments. My background is computer science. I am a security protocols engineer as well. So I significantly understand protocols. That's one of the reasons why I got lucky in 2013. When I came across Bitcoin, I could really appreciate what Bitcoin is. In my day job, I run the Innovation Lab Technology Engineering globally for Julius Baer. Julius Baer is a Swiss private bank, second largest listed Swiss private bank. Yes, let's get on now. So from a Bitcoin journey perspective, this is my interest areas. I work on Miniscript, Multisig, Mosaic, Frost, and Bitcoin worlds, and that technical angle allows me to kind of focus on digital Bitcoin private bank, Bitcoin inheritance and wealth planning, and then enterprises, Bitcoin wallet multi-custody. So if you're looking to build a startup, and I would highly recommend to explore the area, the ones that are written below. So how can you build a digital bank, Bitcoin bank? How can you kind of talk about inheritance or build something for inheritance products for the wealthy people? And then enterprises, how can you serve enterprises and allow them to build, have custody solutions that typically they can't build themselves. They would like a partner like you, a young entrepreneur, to build something. So that's my area of work that I do generally in the Bitcoin space. A very important disclaimer, I come from a bank, but we are on a weekend. I'm sharing some of my own personal knowledge. In today's session, the disclaimer is this is not financial advice. Anything that I say is not financial advice. Please make sure you kind of do your own research and understand the space. Whatever I'm sharing is my own point of view from a wealth banking standpoint. It's not fact. There is no facts here, okay? So it's when I say whatever I say that do this, do that, it's a point of view. So you have to take it. And we will be speculating a little bit how the future looks like. So I'm telling you it's speculative. So take it with a pill of orange pill, yeah? So if once we've done with this session, the only thing that I want you to remember, recollect, is this one single image. If you don't understand anything else, what you need to keep in mind is this one single image. Can anybody take a quick guess what this is? What land parcel is this? Would you be able to quickly guess? I have written the answer though on the right hand side. But can you still guess? What is it? Is it Amsterdam? Is it Manhattan? What is it? Manhattan. Fun factoid, it was also known as New Amsterdam. So when people left from Europe, they colonized this land, and this was called as New Amsterdam in the 1600s. Then came over the British people, they renamed it to Manhattan in New York, right? So at the end, we will summarize this session by showing another image. But keep in mind that there is a strong argument that Bitcoin is the cyber Manhattan in today's time. If the best analogy that you can take from wealth creation, people who own a good amount of real estate in Manhattan today, they got lucky is what a lot of people say, but no, they went ahead and bought in times when nobody would have believed what Manhattan looks like today. So this is not how Manhattan looks. This is 1600 Manhattans, you know. It was being colonized then. So we will talk about that as well a little bit on the wealth side. So before we get into that, a quick note on the wealth side. You know, what does private banking do? What is an investment's mindset? I just must highlight, right? So when you've come to an age where you've saved a lot of money, when you've earned a lot of money, when you've kind of come to a stage where your businesses are successful, your first challenge is how do you save this money? How do you grow this money, right? If it's a significant sum of amount of money, and that's what wealth banking and private banking does. So we work with the most richest people in the world, across the world, and we help them ensure that they don't end up losing this money, and this money can then be transferred over to the next generation, inheritance, wealth planning, taxation. So these are some of the aspects we do. And store of value is a very interesting concept. So we've heard the word Bitcoin, store of value. What is it? We'll go a little bit in that direction. And then similarly, institutions have a challenge of Bitcoin treasury and institutional custody. So a lot of institutions buy art, a lot of institutions buy securities, a lot of institutions have trusts, right? These are a lot of different kind of wealth banking kind of ideas. So I just wanted to let you know that when we talk about Bitcoin, all of these are still applicable. In the new digital capital, a lot of these are still applicable, and this is a greenfield area for a lot of entrepreneurs to build. So think from that perspective. So yeah, this is a very interesting piece of image. And you see the early monkeys carrying a bag of gold, right? And then you have the credit card primitives, us using credit cards and debit cards. And then you have this guy using the mobile phone and then transferring $1 billion over Bitcoin seamlessly, right? So the question is, out of the 4 collectible store of value, medium of exchange, unit of account, what stage is Bitcoin at? Let's fundamentally unpack this, right? So a lot of us in the last 15 years use Bitcoin as a collectible. We thought it was cool to get into a token that probably could be money, and we ended up buying that. So most of the stages that you've seen in the previous 15 years, Bitcoin has behaved like a collectible more than anything else. It has started to behave like a store of value recently, where a lot of people are talking about the returns, ROI in the last 15 years, 60% annualized returns in Bitcoin year on year. And then people are like, oh, this number, 60% beats all the other investment classes. So maybe it is a store of value. Maybe this can kind of become an inflation hedge where I can use to park my wealthy investments in Bitcoin so that I can fight inflation, right? That's where we've started to discuss store of value. And obviously we're in a Bitcoin conference. You've gone through some lightning sessions. You've gone through some payments sessions where we are talking about how Bitcoin can, enable payments. That is where it is called as medium of exchange, right? But the question is, and everybody keeps dabbling around this, will use cases of Lightning take over? Will they actually happen? I think it's for you to decide today whether that will happen, or store of wealth value, which is store of energy, which is store of your proof of work, your hard work, your savings, your earnings. Is it going to first, that will play out. So we'll talk about that. Unit of account is everything gets denominated in Bitcoin. So today, when I see outside, I think it's a Bitcoin conference. So everything is beautifully denominated in Bitcoin. If you want to buy anything of one of those booths, you have to actually use sats. They're not accepting any fiat currency, right? So that is unit of account. Imagine that happening all across the markets globally on your online platforms. No more denominated in your fiat currency, right? So that is unit of account. Is that happening today? Maybe only in the Bitcoin conference. The moment we walk out of this conference, unit of account doesn't happen. Everything is written in Bhaat, right? So how far will this stretch out and go is something we will explore. So I've relabeled the same 4 stages again, just to show you with time how things will progress. Same thing again, right? Just for a more better clarity now. So digital collectible for nerds is how it started. Emerging store of value. This is how it is starting to look. But is it a reliable store of value? Maybe yes, maybe in a couple of epochs. One epoch is 4 years. Every halving is what we call as epoch, right? So 2 epochs. So reliable store of value, and then widespread medium of exchange. See, widespread medium of exchange comes later than reliable store of value, right? So that is the aspect that you have to keep in mind, and you have to decide. You decide, not me. You decide whether use cases of payments will take off before store of value takes off, right? Store of value is connected with wealth banking. That's the angle that I'm trying to bring back again. So this is very important. We'll visit this graph again in between, just so that. So, okay, I've talked about store of value, medium of exchange, unit of account, but how do I understand it better? So typically your fiat currencies is your unit of account, Baht, Rupee, right? And USD, and medium of exchange is payments, like we pay over payment rails like credit cards and stuff. And then store of value is gold. So we're most used to the idea of gold. Gold is like the oldest form of a reliable store of value. So eventually, where does Bitcoin fall? It looks payments when we talk about Lightning, it looks like store of value, and then unit of account, maybe not today, only in this conference, luckily, but otherwise, no. It doesn't behave like unit of account yet. So from an adoption curve standpoint, this is what a lot of people in the industry who kind of building also believe, that the store of value will play out first. And a timeline like this could look like. So round about 2034 is when the medium of exchange takes off. Very interesting. So what are we doing today? Why are we building Lightning today? Well, the pioneers of internet built internet so that the other people could enjoy internet as a mass adoption. So the builders will build. The question is, you as an entrepreneur, you as a business guy, you need to evaluate whether if I build with a certain technology and a certain use case, will somebody come and buy? The adoption curve says store of value will take off first. So a lot of people get mistaken. They start building for medium of exchange. They go to VCs. They start asking for money, and the VCs ask how many customers you have, how many traction you have. Now that's an adoption question, huh? A lot of people are like, oh, I am struggling. I have to do a lot of marketing. I have to, spend a lot of money to educate people. Hey, use Lightning, hey, use Liquid Network, or use some other use case, right? Well, you're trying to fight the curve. You're fighting the market. Well, somebody's got to do it though. That can be a choice. The question is, do you want to do that, or do you want to build for use cases of store of value? And then the question is, what are use cases of store of value, right? So wallets is a very strong example. Exchanges are predominantly, there are a lot of exchanges already geographically, but after you have purchased your Bitcoin on an exchange, the first thing you want to do is allow it to be self-custodied or collaboratively custodied. And that's a space a lot of people miss out on and they don't build for. So that's where wealth banking becomes very interesting. A provider that can enable wallets for you to allow you to be able to kind of store your Bitcoin safely in exchange of a service, and that probably drives a lot more adoption. So be mindful of this. Don't try to fight curves. Try to fight on what you can control. You can't control this. This is how all product adoption curves typically happen. So there's this great gentleman, you can find him on Twitter. He talks about this very recently. He tried kind of crafting this for everyone, that medium of exchange is nowhere near as important as store of value in 2024. In 2034, he's wrong. In 2024, he's probably right. He's trying to highlight that, no matter how attractive it can get when you talk about lightning and payments, but you as an entrepreneur have a responsibility towards you and your employees, that you start thinking about the adoption curves. Will customers come and use your platform if you are building something with regards to store of value or with regards to payments? So it's a very important question you should ask yourself. And basically talks about how store of value is very important as a foundation before this becomes for a payments scenario. So maybe now I think you're clear that I'm trying to talk about something store of value, which is store of energy, which is store of your hard work, your savings, your treasuries as an institution. And that basically is all about wealth banking. So wealth banking typically is sort of a player in the market that all private banks, they focus on helping you grow your investments against your inflation, help you grow your sort of energy that you have stored, But maybe, since this is also a beginner stage, right, and it's important to kind of also emphasize store of value. Do we know store of value? Do we understand store of value? Yeah, we do? Do we really do? So let's try and take this mental activity quickly. Some of you already know, great, but let's see. So there's a refrigerator. You understand store of value. You go and keep your food every day in a refrigerator as a store of value, store of energy that you just baked with a lot of hard work. Sometimes in the evening, whatever you cook, you have for lunch the next day. So typically, the food can stay for 24 hours, good enough, and then it gets spoiled. So the refrigerator cannot help you store anything beyond 24 hours. It's a problem with the refrigerator. So what do? You only keep the fresh food next day and you remove the old stale food, right? Human body composition, there's a concept of fat, right? We all have fat, right, on our body, right? It's a store of value function. It's so important for human evolution. If you did not have the ability to store fat, we would have not evolved, by the way. You can't find food for 4 days in primitive years, you're dead. Unless fat supported you, right? Today it's a different problem. It's the other way around. We have too much food, so it's an obesity crisis, but fat played a similar role of store of value. Well, humans could only then progress so much because it allowed them to be able to find food in 4 days. So as a human evolution, we didn't do that well. Then we also have a store in our house. We figured out that by adding some ingredients, we can increase the longevity of the food in the first place, right? That is where you have a lot of foods that you can store in your grain of bags and you can put it in the storehouse. So guess what? We invented a way to store value in Bitcoin in decades. This is game changer for humanity. You couldn't have saved, even in your fiat, if you keep your money in fiat with inflation, in 10 years, most likely you will lose 30 or 40% of that value, right? You couldn't save value as a humanity. So this is very interesting. If some of you don't know what store of value is, I thought I'll bring this up. Well, we've been celebrating Bitcoin a lot. It's doing great. Let's talk about traditional wealth. Where in the graph of this entire wealth space, where is Bitcoin? Can somebody help me find, where is Bitcoin? Yeah, it's on the top left corner, one small dot. Did anybody feel you're late to this Bitcoin space? Hands up. 15 years, Bitcoin already in the making. A lot of you feeling, I'm late to this party, I'm late to this space. Guess what? You're super early. Super, super, super early. If you're attending this conference, if you're in this session today, you're super early. I want you to feel very happy about this. Whatever you start and decide today, you're very early. So it's right, one small speck, 1.4 trillion USD. Well, what's the total overall assets in the world? 900 trillion. 900 trillion. 1.4. 900 trillion. 1 out of 900. Right? Has the store of value story played out? I've been talking about store of value. Statistically, has Bitcoin been adopted as a store of value? It has to munch. It has to munch. A lot of the other things have to go away. They have to be demonetized. They have to move into Bitcoin before this becomes a store of value. Right? Then only we can say. So let's keep this in mind. Traditional wealth still rules. It will start moving into this direction. Who's building to move traditional wealth into Bitcoin? That's an interesting space to build for entrepreneurs, no? So let's play it out. How is Bitcoin going to demonetize the other assets over time? So let's draw the assets: gold, cars and collectibles, fine art, stock market, real estate, bonds and money. Something similar to what I was drawing here. I've put it in a table. Total addressable market for all of these, $12 trillion is gold, 6, 18, all add up to 900. 200 trillion is speculative. I said I'll be speculating a little bit just to give you a direction. So it goes to probably a quarter of 900 trillion, right? And that essentially means somebody did the math, not me. I'm not prescribing, no financial advice, $10 million per BTC in USD. That's where it will go potentially. Why will it go? Because Bitcoin behaves as a very good store of value. It has been demonstrated last 15 years statistically, right? Last 10 years, for sure, 60% annualized return. So a lot of people will figure this out. Wealth people do only one thing with their wealth bankers like us. They spend time to figure out, how can I keep storing my wealth? I don't want to lose wealth. I know how to build wealth because I built it. Can you help me understand the market dynamics so that I can keep storing the value? I don't want to give away this, right? And that is why they will figure out. Some have figured out, and that's like guys like Michael Saylor figured this out very early, so they moved into Bitcoin. Others will figure out. When they figure out, they will start diluting away all their other traditional assets, and they will start moving to Bitcoin. And this is one of the scenarios. It goes to $200 trillion, right? Who's helping them build a platform that can enable this? That's homework for you guys, right? To see and figure out. So something like this will happen, right? So probably when it only munches away gold, which most likely it has started to munch, is a lot of what people are saying, what we are observing as well. It will go 30x, otherwise it goes to 500x if it goes to 200 trillion, right? That's how it will play out. We're speculating. Just to understand, if we were to build in the business of store of value, do I have a strong use case, right? Yeah, a complicated graph. Sorry, I know. Sorry. Let me just kind of highlight to you. So anybody who's built a company before or is building a company, show of hands, show of hands. Any entrepreneur? Great. Thank you, sir. Thank you. Okay, great. So this curve is, one of them is the bell curve that you see, right? Crossing the chasm curve, where you've kind of segmented this in innovators, early adopters, early majority, late majority, and laggards. And then there is another curve on top, which is the S curve. So I'll shortly break this down. These curves are applicable to all startup founders, irrespective whether you're building a Bitcoin, crypto, or a traditional business, digital business. When you build such businesses, you go through these curves. You can't beat these curves. So when you start a new technology, every technology goes through a phase of innovators, early adopters. The internet also went through this curve, which means it talks about market share, which is technically again adoption. Where are we today? Where are we today in Bitcoin? I want to ask, right? So I'm trying to build a thesis where, are we saying it's going to be a medium of exchange? Unless it doesn't become store of value, it can't. And we are in this phase, this small circle. Last 15 years, so whoever is sitting in this room has an innovator mindset. You're always ahead of your peers. You're always ahead of your friends. You're always ahead of your family in adopting a new technology. You're here. So when we meet in a conference, we think Bitcoin's going fast. It creates a bubble for all of us to believe that it's happening, it's happening, it's happening. Because validation, right? Meeting Bitcoin peers. Awesome. Why can I say this? I said I was class of 2013. I did 11 years back a lot of these conferences since then. I felt the same. 11 years, I'm standing here in front of you and I'm still saying early adopters. Right? So one of the biggest lessons that I can share with you with a decade-old history, we're still very early. It's visible, 1.4 trillion. I just showed to you statistically the market cap of Bitcoin, right? So the next 10 years, a very interesting point. So human mind thinks a lot linearly. It doesn't think non-linearly. So when we think linearly, if I were to ask you, oh, look at this big curve, early adopters, early majority, how many years will it take? Somebody will say 20 years. Somebody will say 25, because I said 15 years for the smaller piece. No, it'll take 10 years. It'll come really fast. Because look at the trajectory of the graph. Look at the slope. It's exponential. It's like a hockey stick. It's going to go super fast. Super fast. So what you will see is, you will see a lot of Bitcoin entrepreneurs building billion-dollar businesses suddenly out of nowhere across all geographies. You're going to witness that because somebody is going to serve this adoption curve. The question is, are you serving and are you building in the right space? Are you building on medium of exchange? Are you building in store of value? That's the question you should be asking yourself. You can't beat this curve. Nobody can. No founder can beat this curve. This has been statistically proven over the last 50, 60 years across all businesses. There is a pattern and curves of how humans adopt technology, right? So, and the customers that you serve here in the first phase of this circle have a different persona. They love hardware wallets. Who loves hardware wallets? Who loves hardware wallets? Hardware wallets, hardware wallets. Yeah, I'm a techie. I love it. I love it. Ask the next segment. Can't handle, sorry. Seed phrases, can't handle. Sorry. Cannot. I don't understand seed phrases. I don't understand hardware wallets. I will take my money somewhere else. Guess what? Who has the money? 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 Oh, the clicker doesn't work. Oh, yeah. Okay. Yeah. All these other people have the money. They don't like hardware wallets. Hello. I have a lot of hardware wallet friends, startup founders, no problem. I've invested in many, no problem. But that doesn't change the dynamic for me and that founder. The dynamic still remains the same. These people will not work. So that's the opportunity for you. Can you think intelligently? So if you think you're an average dude, congratulations. You need to be an average dude to think like for an average customer, to say and challenge the hardware wallet seed phrases won't work, right? So these are some of the insights that a banker is trying to unpack. As part of my Global Innovation Lab job, we're trying to figure this out. How will mass adoption happen? What are the market dynamics? That's the kind of insights we bring. So that's what I want to share. And then there's another bigger circle there, which is more 20 years out there, when probably medium of exchange has started in 2034. And that's when it starts taking off into going into a more mainstream use case. So you got 10 years. You have 10 years from today. A decade to build and become one of those billionaires who's going to serve this curve. So this is the same curve. I'm just trying to show you how typically that adoption happens. This is called the crystal growth model. Go and look it up. Very interesting. If you want to unpack that curve. Hyper-Bitcoinization, from a pricing event standpoint, see, on this extreme bottom here, store of value. So there are two graphs superimposed on each other. One graph is on the left-hand side with the y-axis and this x-axis, and this is the other one, y-axis. You have unit of account, which comes later. You have medium of exchange, which comes later. What comes first? Store of value, right? This is the same graph. I've just unpacked it a little bit for you. So let's look at some of this. And this is sort of our growing understanding that I'm sharing. So anybody know Glassnode? Glassnode, if you want to look up any statistics around any of the kind of Bitcoin adoption, it's an interesting place, I'm sure. So somebody walked up yesterday and said to me, did you find a whale in the conference? I was like, yeah, that's an interesting question. I don't think a whale will divulge. So I'm sure you know about this categorization and bucketing. Humpback, whale, shark, dolphin, fish, octopus, crab, shrimp. This is typically a terminology that we use in the Bitcoin space to talk about how many Bitcoins that one individual or an institution owns. So if you're a shrimp, you have less than 1 Bitcoin. If you're a crab, you own anywhere between 1 to 10 Bitcoins, right? That's the kind of terminology we use. And as you will see, this is just a snapshot between 2 years on Glassnode, which basically talks about the distribution of holdings of Bitcoin, right? On the left-hand side. So there are plebs and retail people who are starting to kind of buy Bitcoin, and then there are wealthy and HNIs in between who hold significant amount of Bitcoin. So it's shark, whales, and dolphins. And then eventually you have institutions and governments and miners on the top, so our understanding is progressively over a period of time from now going forward, a lot of the Bitcoin will start shifting away towards the institutions and eventually central banks. So in the longer run, very few wealthy individuals will manage to hold Bitcoin. There will be events where you will somehow end up giving Bitcoin because it is much dearer to the institutions, governments, and banks after they realize this. Now, this is what we are believing to understand. This could still go wrong. This could go in a different direction. But the way this year the ETFs happened is a clear evidence. If I would have said this last year, nobody would have believed me. But you look at the ETFs, BlackRock has come and kind of consolidated almost Bitcoin equivalent to Michael Saylor, right? Almost equivalent to that. So traditional players, traditional big people who own a lot of wealth will start moving. Governments are the biggest money holders also. They in fact print money, so they can do a lot. So we will start to see this. Why am I talking about this? I'm trying to talk about a customer segment that you will eventually look to serve. If you're a Bitcoin builder, you have to understand whom are you going to serve as your customers. The guy who holds the Bitcoin is whom you're going to serve eventually, right? It could be a different desire to serve plebs and retail, but will they have a paying capacity to you for a use case on a business? That's a different question. You have to decide. The place where Bitcoin goes is where you can build the business. The guy who holds it will need services, is where you have to serve this customer. So that's one insight for you. We believe that this is how it will play out. The percentage growth there on the top is very high. But be mindful, the base is also very high. When I say base, they're holding, when I'm talking the growth of 14% for a whale, they typically hold 5,000 Bitcoins. So 14% on 5,000 Bitcoins is much faster and higher than a percentage growth for somebody who holds less than 1 Bitcoin. The base is higher. Because the base is higher, the percentages actually demonstrate it moves much faster, higher consolidation, right? Well, that is where the greatest wealth transfer in history will happen. Demonetization of store of value, the monetary premium that all our other asset classes have. So what somebody did was drew up this beautiful graph where you have the S&P 500, US real estate, gold, US dollar, Bitcoin, and it started. So you're drawing all other graphs relative to Bitcoin. All of them are falling. Everything. So what's happening? This is very important if you can understand this. A lot of people say Bitcoin's growing faster, 60% annualized return. What does that mean? All other assets are losing value. So if you hold any wealth in any of these other assets, you're actually losing money. You don't realize it. So there's a very interesting, simple case study you can do in your mind. You price your house, your dear house, your exciting real estate returns on investment that you are always pitched and told. You measure your house's value in Bitcoin in 2017. Do it today. You will understand something very interesting. And then you measure it in 2022 or 2024. I've done it. My house keeps losing value. Yeah, if you try to do this with gold as a benchmark, you will also see it probably is close to that value or is okay in that value, but all other investment classes fall relative to Bitcoin. So the demonetization is happening, you don't realize it. The monetary premium that your other assets. So you can feel good if you got a 2x return in your fiat currency. So if you measure your house, 200,000 USD, and then it becomes 400,000 USD in 5 years, double, right? Double return. No, it's not double return. Measure it in Bitcoin terms, you've actually lost value. Because if Bitcoin becomes the store of value, the international reserve, the unit of account, then for sure your assets are losing value. So what's happening is, what we discussed in the previous one, all the other asset classes will get demonetized. Everybody will start selling their respective gold equities when it hits them, when they understand that Bitcoin is the place to hold my wealth, right? But there's a difficulty, behaviorally there's a difficulty. I can see my real estate, I can see my gold bars, but I can't see my Bitcoin. The closest that I can see is in hardware wallet, but I don't like the hardware wallet. So where do I keep my Bitcoin? How do I feel peaceful at night when I sleep that my Bitcoin is there with me? That's the kind of service a lot of entrepreneurs will serve, a lot of businesses will serve, right? And banks do that. Banks traditionally have been giving you that comfort for 100 to 100 years. So a lot of banks will step up with the same technology of multi-custody, will offer it. And then you go and talk to your bank. Oh, you do multi-custody? Huh? Oh, so I can keep my Bitcoins with you and I can self-custody. Okay, great. Then I trust you. Let me do it, right? So it's very important to kind of understand that how, and then they will sit and educate you as well, right? They will figure out ways to kind of educate you as well of how this works. So the shift of monetary premium from traditional asset classes will happen, and that demonetization is happening as we speak. So if you have no clue if this is happening to you, it's happening. The matter of choice is, will you take action of building a company that can serve people, right? So I also talked about a little bit of inheritance planning. This is a very interesting meme that I found out. So there's this parents that are planning. Let me explain to you how this works. So today as we speak, you can actually transfer wealth to your next generation without a jurisdiction. So typically if you have to do inheritance planning, you do a will, right? You write a will. If you're an institution and if you want to transfer it to a professional body of managers to run your company after you've gone, if you do not have a succession, then you do it via trusts, right? Trusts and wills are jurisdictional based. So if I build a trust in Singapore, if I write a will in Singapore, then it is applicable as per the laws of Singapore. So if Singapore eventually says X percentage of wealth tax, it has implications. So when my future loved ones, my child takes over my inherited money, real estate, securities, anything, if there is a 20% wealth tax, for example, in a certain jurisdiction, it is applicable, right? So, but the challenge is we don't know political certainty as well, right? We are seeing this as it plays out, the kind of conflicts that are going in different geographies today, right? The Russia-Ukraine conflict, the conflict in the Middle East, right? And around Israel. And there are rich people there also. Now they're wondering whether this jurisdiction will last. Will somebody click on that red button? And will this country survive? And how do I do inheritance planning in that sense? One great way to do it is via Bitcoin. So you store Bitcoin. In Bitcoin, you have a way to do time locks. So I talked about a little bit in the start of the mini script. So time locks, you can lock your Bitcoin for the next 2-3 years, 5 years, 10 years. Nobody can hack it. That only opens up after 10 years for your loved ones and your children, right? So you can time lock it for 40 years today. And you just need 2 keys to play that out. One the lawyer holds, or one your family holds, or one a trust or somebody, a key holder, an institution that provides the service holds that one key you hold, 2 keys combined, multi-sig, and you open up, and that money can be transferred to your loved ones. No trusts, No wills. In fact, there's a law in US called RFADA that says cryptographic wills take a precedence over the regular wills. That essentially means if in my will it is written that my 2 kids will get my wealth, which means maybe Bitcoin as well, but on chain, if I have given my inheritance to my wife, then the one on the on chain takes a higher precedence over the will because she owns the keys, right? Very interesting. You should look this up. So this has a lot of implications because Bitcoin significantly has the property of being audited as well. So my other asset classes can still be in a challenge where they might not be audited. Look at the auditing power. 10 minutes, spot on. Last 10 years, there is only one more system after internet that's never gone down. So I'm a software engineer. We build a lot of technology. We say SLAs 99.99% uptime. We have a maintenance window. Guess what? Bitcoin's not gone down for last 10 years. It is continuously breathing every 10 minutes. It is being audited every 10 minutes by all the miners. Is that a superior technology to park my inheritance, or is the will, which probably, Saturday, Sundays, they're off, they have work timings. Big challenging, right? So it's very interesting. Think about this. So today, there is this standard discussion. I raised this topic a little bit. So you have the options for a BTC investor. Anybody who wants to invest in BTC, this is sort of the kind of scope, or I would say landscape of investments that you can do. And self-custody versus custodial is what is better. Self-custody is any day better, right? But the convenience, the simplicity of custodial solutions, I go on an exchange, I buy, done. No complexity, right? So these are like 2 balancing forces that you have to look at, and based on that, you have different kind of offerings. So if you really don't want to start, if you just want to dip into the number go up technology, which is you want to take the benefits of Bitcoin going up and you want to counter your inflation, and if you don't have access to exchange or jurisdictionally you're not allowed, then you can just do this by holding MicroStrategy, MetaPlanet, Semler Scientific, right? And more such companies will come that will start holding Bitcoin indirect. That's your start of your journey, right? Maybe your risk profile does not allow you to test the other stuff. Maybe you don't want to complicate it further. You start from this. But then progressively, you can keep increasing what you want to do. So from ETFs is a step up, more safer, one-to-one, more control. They only do this Bitcoin custody versus MicroStrategy could suddenly decide without your approval that I want to sell all my Bitcoin. You have no control, right? So your control goes higher as you move on the right-hand side, but the complexity also goes higher. That's the opportunity. It shouldn't be complex. It shouldn't be complex. As an entrepreneur, as a founder, as a startup owner, if you're building in the Bitcoin space, you should try and solve for this space. Because then self-custody with more convenient solutions becomes really, really enticing in the market for a lot of people to go towards that journey of becoming. So this is our judgment. This could be wrong, again, speculative, but I already discussed how Bitcoin will go as a treasury asset on the balance sheets of governments and big institutions, but we see a lot of new age private banks come up in the next 10 years. So you will see, I don't know if you're aware of Zappo Bank, if you've heard about them. They work and behave, they're in Gibraltar. They offer, I think in almost 40 plus countries, they just charge you like $1,000 a year annual fee, and they give you the services of a private bank digitally. So you will see a lot of such digital banks. FV Bank is another one that's come up. But a lot of new age private banks will go mainstream. They will allow the same services that typically traditional private banks used to offer the wealthy. Now the definition of wealthy will be more in terms of Bitcoin holdings rather than in traditional wealth terms, as Bitcoin munches over the traditional assets. So the best analogy is a lot of people have given different analogies, but I really like. So real estate typically has been associated with store of wealth. A lot of people across a lot of different jurisdictions understand this very well. There's a fascination for real estate. The best analogy that I can relate to this, if I have to say, hodl and store of value thought processes, is the Manhattan analogy. So that's how Manhattan looks today, right? Look at one Manhattan looked 1600, and the story goes like this, right? 8 million people had arrived here. 8 million people. There, sorry. And only 10,000 had arrived when they started buying. But they bought into the vision that when 8 million people will live like this, their real estate value will go high. Till today, Manhattan commands like a premium for real estate, right? And you can't go wrong with it. But what's the problem with Manhattan? It still has jurisdictional laws, New York municipal corporations, maintenance, right? If they decide that the FSI, floor space index, cannot be increased, you cannot further build. So that is the challenge. What if you moved your wealth from there and went into the cyber Manhattan? The cyber Manhattan is Bitcoin. So hyper Bitcoinization talks about a similar virtual looking thing going down the road. Yes, so that's the end of this talk. I hope I've been able to convince you that store of value probably should be evaluated first. Solutions around store of value should be evaluated. If you're not building, you will have a tough time getting adoption. And you're answerable to your investors, you're answerable to your employees, you're answerable to your family if you're building something. And if you're building it against the wind, you will have a problem. There is no doubt about it. So as a founder, as an entrepreneur, think twice. What are you building in what direction? How is the market playing out? Is it playing out for store of value? Is it playing out for payments? People who are building on the research side, that's fine. That's their job to build for Lightning so that Lightning and other use cases play out. But it's also important to remember this. Yeah, any questions you would like to quickly ask? If anything that's kind of, go for it. Just go for it. There's no right and wrong question here. Okay, going one, going twice. No questions? And the last one thrice. Okay, thank you so much for coming down. Really appreciate it.